So often is the case, you either use it or you lose it. And as we're approaching the start of the tax year and therefore the end of the current tax year on the 5th of April 2017, there are a number of annual exemptions and allowances which should be considered in order to take advantage of the opportunities that are present. One of the most commonly known annual allowances is possibly the ISA, or the individual savings account. Now, it's still not too late to contribute into an ISA, and you can contribute up to a maximum of £15,240 into a cash ISA, stocks and shares ISA, or a combination of the two. It is important, however, to be aware that if you don't contribute and maximise your ISA allowance, it's not an allowance which can be carried forward or backdated. You use it or you lose it. It's important to bear in mind that the limit will be increasing, which is good news, as the limit in 2017-18 will be rising to £20,000 per individual. And like I said, that's great news for savers and investors. There are also other ways in which you can utilise annual allowances. One particular area is capital gains tax allowance. Now, this is whereby individuals can realise capital gains they've made on certain investments and not pay tax up to a certain limit, which is currently £11,100. It's important again, however, to remember that this is an annual allowance, so therefore if it's not used, it can't be carried forward to the next tax year. Interestingly, however, any capital losses which have been made in the past can be carried forward. So it's an important area to consider. Other actions which can be taken within this current tax year, of course, is gifting, to reduce your estate for inheritance tax, and please refer to previous articles by my colleagues which can provide you with more information on that area. Pension contributions, which can provide you that valuable tax relief on any contributions you make. One particular area in relation to pensions which does have a specific deadline of the 5th of April 2017 is an application for individual protection 2014. Now, over the years, the government has been reducing the amount individuals can build up within a pension before additional taxes apply. This level, known as the lifetime allowance, has been reducing from £1.8 million in 2010 and 11 down to £1 million in the current 2016-17 tax year. If, however, you had a pension pot of £1.25 million or above as at the 5th of April 2014, your pension benefits can be protected up to a maximum of £1.5 million. Now, that's a potentially huge saving for those with significant pension pots, and definitely an area which should be given specialist consideration to. So we very much see financial planning as an ongoing process to help achieve short, medium-term and longer-term goals. It's therefore very important to work closely with your advisor to identify and explore those opportunities as and when they arise.